It is Wednesday, the 1st of October. I'm just going to do a very short trade review for a gold long that occurred at around 3 a.m. New York time in the London session. So just looking at this candle right here at 3 a.m. had a really nice rip up here above this previous day high and the high of day. So we're going to do a quick top down and talk about it. Start off with, we had this really nice sell-off on Tuesday after Monday climbed to a premium. That had a really key point of interest and also fails to retest the previous week high, which resulted in this lovely up move. The trade that I'm talking about today is just in this area, but I'm going to put it in the context of where we're at. That's Tuesday's candle on the daily chart. That's today, trading straight back up. Going to the next time frame, this is the 15 minutes with the 30 minutes on the right. On the 15, we can see what actually happened this week. This is the Sunday open. So we opened up below the previous week high. We had a breakout above the previous week high. And then you'll also notice that we broke out above the 800s, which is this line right here. Very key is that we failed to retest the 800s. We also failed to retest the previous week high. That indicates that it was going for an extended move. Very high resistance throughout Monday, engineering all of this sell side and these smooth lows. And the key here is that midnight is all the way down here, and we never returns down to midnight. Midnight acts as fair value for the day. If you want to buy, then it should be below it or at it, and if you want to sell, it should be above. We spent the entire day at a premium above the midnight open, and I personally like to see us return down to the midnight open in the New York session between 9:30 and 4 p.m. So anywhere during the RTH session in the stock index futures, I like to see us return down to the midnight open. So we never did that there. That means that I extend out the midnight open throughout the week until we do hit it. And as you can see, Tuesday continues the breakout, continued rallying high, and then a nice aggressive sell-off at 2:45 a.m. hitting that Monday midnight level, failing to retest the previous week high yet again, and then we reversed from there. A few other things I'll point out about this as well. One is that 2:45, this 15-minute candle opened up and instantly sold off. Something I've noticed is that if we are going to have an aggressive drop lower like this, it usually occurs on the 45-minute candle of whatever hour you're looking at. That is a lot of the time, that's 9:45. Let's say if you're trading in NASDAQ, or in this case, we had a rally through overnight and then consolidated a premium, and then 2:45 sold off. Next thing is that this low, if I jump back over to the 4-hour chart, you can see that we actually never took out the previous 4-hour candle low. So this is 6 a.m. It just went straight up. So that's 5:45 hits our point of interest. 6:45 didn't trade it into that wick at all and just went straight up from there, resulting in this huge short squeeze. The reason why it's a short squeeze is because from this high down to the low, there is not a single swing high for trailed stops, meaning that any liquidity on this time frame for people to trail their stops, if they're going to use a swing point, it's going to be at the high. And so we just have this high resistance grind all the way up to that high without much of a pullback at all. What stood out to me about this, the 6 a.m. open just here, is that maybe, and I need to look into this a bit more, but it's something that I think I've observed in the past as well, is when we fail to take out the previous candle low, that can either indicate that we're just engineering relatively equal lows on the 4-hour chart to come back down to, or that we're actually about to have a short squeeze. So it's in a hurry to head back up without taking out the previous candle low. So maybe when we have a situation where we have the narrative for a short squeeze, meaning that there's no place for people to trail their stops, and at a nearby at least, so it's likely to have a big move to reach to a premium level. And at the same time, it fails to take out the previous candle low on the hourly, the 4 hour, the 15, whatever, and then immediately heads straight up, then that could be the combination that results in a short squeeze. So that could be a signature potentially. But after doing that, you can see that we had this nice high resistance grind up. We had a drop below this low just here. We'll zoom in. We had a closure below that low at 8:30 to 8:45, closed below, immediately rejected straight back up, fell short of this obvious buy side, which will be an impulse high on the 5-minute chart, fell short of it, pulled back into this bullish order block, and that could have been a nice long entry. But yeah, all that to say, this Monday level is pretty cool how it was engineered down here. We then had the breakout, engineered heaps of smooth lows just above it, and then came down to accumulate down there. Up to this level, we can see that we've actually already tapped the previous day high. So we hit that overnight at 2200, consolidated a bunch, took some sell sides, and then hit this rally. So here is us taking that previous day high already. So we've already tapped into that previous day high, tripping in any longs above that level. We now know that there will be sell stops potentially down below it. Selling off down to this range, leaving these nice long wicks in the 15 minutes, also on the 30 minutes, and likely on the hourly as well. So engineering a lot of sell side down here below all these lows, and having multiple runs into that level. Now if I drop down to the 5-minute, the next thing that jumps out at me is that we have multiple hourly opens at the same price. That's 1600 and 1800. That indicates an original consolidation, and below that sell side is exactly what we tapped into. So you could see that as a completion of a market maker sell model, up to this high, down to this low to reaccumulate. And this is the hourly chart over here as well. You can see that we did have a nice long wick that we ran out already. We also have this nice premium long wick above us. Is that when you have a really long wick that rejects from such a major high, and then another wick just after it, anyone who was short up here or got taken out, so they're going to see these long wicks and see that as a bearish rejection. When they see multiples of those long wicks, then they're likely to be taking shorts. At the same time, we're breaking below all these lows. So you know that there's going to be a lot of sell interest in here, and for us to accumulate a long position, that's exactly what we need as a counterparty to our trade. Well, first of all, we've got 1800 throughout the Asia session entering all these smooth lows. We then entice longs, a new 4-hour candle opens at a deep premium and then drops straight down into a discount. We then have 1-2 digs below all the sell side, then has a failure swing and a rally for internal, so ERL to IRL, and then drops down to make a new low, making that third drive lower, taking out all the sell sides, and then getting a really nice rejection back up. That's also below the midnight open, which is a discount. It's also below the 4-hour candle open of 2 a.m. So that drops down, rallies up. And so at this point, I was very interested in a long because of the facts that we had all the sell side down here. We also were very close to the 80s, and I expected that to be a very likely drawn price. And whoever was trying to short with these long hourly wicks, their stops above the high. So I was watching prices that dropped down into this range. We were rejecting from this short-term high, which is actually the 2 a.m. high as well. That was the only thing that gave me a bit of caution. I wanted to see how that played out. So on the 1 minute now, there's that low that we made, the rally. There's that 2 a.m. high that we just tapped above and then pulled back into the range. So how I got into this trade is I saw that we had a impulse low down here, the most discount impulse low. And how I use these is if we are bullish and we hit this low, I'd expect us to reject higher because it's at a discount to the range. There are no swing lows below it, meaning that if it was to go below this and show intention for going below it, it's likely coming for this low. So I was looking out for a rejection from this low, and sure enough, we get that right there. Next thing, because this is a impulse rejection, I'm looking for an impulse rejection failure, which is the opposite of this, the antithesis. And what that looks like is we hit a high that I'd expect us to reject from, which could be this high, it could also be this high. I chose this one because if you were truly bearish and it rallied all the way up to here, it would be a little bit less likely. But we hit it here, and we got a really nice rejection away from it at 3:01 a.m. That's exactly what I want to see, because that means that if we head straight back up into that level, then it is no longer looking very bearish at all. And that's exactly what we do. We rally up into that level, and then this is the key. We close above that swing high. But not only that, we also closed above this swing high. And that is just something that I'm observing at the moment about how when we actually close above the previous candle high after having had a retracement, that tends to actually give us a really good indication that the trend has changed. It's just something I'm observing at the moment. But yeah, that looks quite strong to me. But we had exactly what I was looking for, which is the impulse rejection, and then the impulse rejection failure on this candle closing back above the swing high. So that became the entry. The stop was down below the failure swing low. Yeah, I didn't actually hold it all that long, I only held it up to about there and did not make 3R on it. But I'll post, these are my executions anyway. So buying, I actually bought just after that. Bought on this candle, the reason being is because this first candle, when it closed with a really long wick that did hit a previous 5-minute high. And so it was only once it shows that it was going to, it showed that it wanted to head back over this wick, that I was confident getting back in. And yeah, partialed fairly fast because I had a bit more size on than I probably should have. But took some off there, and then as we headed up into the range, my exits were not ideal, I'm not gonna lie. They need a lot of improvement. Obviously that would be a lot of improvement if I held up for this entire run, and I need to develop a systematic way, or a fairly systematic way of taking profits that if price wants to run, then I'm along for the ride, rather than just saying, okay, I'll take some off here above this high, take some up at this premium high up here. Like, sure, I can do a bit of that, but at the same time, I need to have a system that gets me into a trade and gets me out of the trade if the trade is about to turn against me. Because then if the trade's just going to go in one direction, I can stay in it a lot longer. But that results in a really nice run up. Yeah, that's about it really. And as you can see, that's that previous day high all the way over here. Because we had already broken out above that level, the next time we break out above it, just have a really small pullback and then have a actual continuation. So the key points of this video, which I'll go over real quick, is one, we just had a massive pullback. There's a lot of buy side above that high, and we were just consolidating just below it. Next up is the fact that we had already tapped the previous day high. We had engineered a bunch of sell side. We had dug into it multiple times, 3 times specifically, and left smooth highs above us, with the narrative that whoever was trying to go short are being enticed short of these long wicks. Taking out major sell side, even the low of day. Had this displacement high, left some smooth lows. We've got all that buy side above us still. We're at a discount below the midnight price. So I'm looking at this area down here, this fair value gap, and I want to see if we can reject from that level. What that rejection looks like is find the impulse low, or whatever swing point we should reject price from if we are bullish. Do we reject? Yes, we do. Okay, and then you look for the antithesis, which is a impulse rejection failure. find a impulse high that we should reject from. It can either be that or it could be that one as well. But you want to see us fail to reject from that high. So initially we reject lower. That shows that if it was bearish, then you would want to see that continue pushing lower. But then immediately after, it closes back above that high. That becomes the entry signal with a stop below the failure swing. And yeah, it's just a great way to get in. Potentially could have also added up here rather than taking partials up here. Could have potentially added using this up closing range as a form of a breaker / mitigation. You can see this new system I've got going. I never realized it before, but if you're on just one window, you can just tap tab and it moves across to the next one. And so now I can have an entire screen for one time frame and I can really quickly flick through them all. Whereas before I had 3 windows up like this, and if I wanted to change between time frames, I'd have to type it out like that. And then the indicator I'm using for this is, that's the name of it there. Really handy. I can just select each time frame and what I'd like to be on the right of it. I think it just has to be a higher time frame, but I can select, let's say, the weekly chart, then it shows that. So I have the 30 minutes up with the 15 and then the 5 with the 1 hour. It gives me a lot of context of where we are actually at within the hourly chart. Something else that's really cool about this indicator is that you can just put on as many candles as you want. I haven't tried how many you can do, but I mean, you can do at least 30 because I've tried 30 before and it worked. So it's a really nice way to have multiple charts on the same chart. And so you can still just flick through like that without having to go through 10 charts to do a full cycle. You can just have 4 charts open and have 8 different time frames, which is really handy. So yeah, that'll do for this quick review. One thing that I forgot to mention is in regards to these long wicks. One way to anticipate that we're about to have an outsized move is when we fail to trade into that candle's wick. So you can see that happening right here. We have a long wick from the 2 a.m. candle. The next candle on this is the hourly chart, failed to trade down into that wick and displaced higher. You can see that over here on the 15 as well. We've got a long wick at the 2:15 candle low that raided out all the sell side. Then following us printing that candle, when we dropped down back into it, we only hit the high end of it and rejected straight back up, closing bullishly above this high. So when you have a failure to reach into that gap, followed with a displacement, that is essentially the long wick plus displacement framework. And you can see on the low time frame, you can really see that displacement up through here with that closure on the 15-minute candle right there. So when you see that, let's say the 15 minutes took out all the sell side, had a really nice strong rejection back up. We then attempted to trade down into that wick, failed to even reach the midpoint of that wick, and then had a displacement, which you can see on the lower time frame. You can trust that, okay, this is an outsized move. Rather than taking partials here, I'm going to look to lock it in with a stop loss because it shouldn't come back down if it is indeed as strong as it is indicating, and then trusting that it should keep on pushing. So that's one way to identify when I should be taking profits or I should be holding on to the trade, is looking at those wicks and how, if we're able to reach down into them.